some kind of a device, maybe to tackle it, just like a traffic signal maybe, or else you may do your mini project and you may convert it a mini project into a prototype, and a prototype into a small maybe interface, maybe as a product. For that, we need what we call as a main is funding, right? So to build any product, we need funding. To make a prototype, even we need funding. That's what we call as seed money. So with that, next we can move over the next level, what we call as it is a growth, where we can convert into the SME, or MSME. MSME is the micro scale or small scale or medium scale industries, and the later stage we can go into the larger scale industries. I think you all know about the MSME. So what is MSME? MSME is the micro. Micro means it is small industries. You can see nearby your place, small industries, micro industries, which have a turnover and about investment is about 1 lakh to 10 lakh rupees, and turnover of around 5 lakh rupees to 10 lakh rupees, which is a small industry, what we call as the micro industries. And then the small scale industries where the investment is up to 10 lakh rupees and its turnover is 5 times and about 50 lakhs. Then the medium scale is about 50 lakhs investment, and you can expect around 250 lakhs of turnover. And if it is more than 250 lakhs of what investment, so it is called as a large scale. There are so many large scale industries like Basket, you can Reliance, you can take Tata Group, you can take so many companies you can take for what we call as a large scale industry. And for all large scale industries, they have started with this kind of what we call as an early stage entrepreneur. They were the early stage entrepreneur, and now become the large scale industry owners. Now, what are the funding? What are the if you have an idea how we can make it as a realistic one. So with the funding, there are different stages of funding, and where we can get this funding. So one of the funding is what we call as an angel investment. So angel investment is nothing but what we call as the investors, like wealthy investors. Those people, some people are doing what we call as a financial background. So they will invest on your ideas. Those people are called as the angel investors. And probably like Reliance is one of the company where Ambani Group, where Ambani in the beginning he himself funded for his own companies. He was what we call as he was in the beginning he was an angel investor. Now also he is one of the angel investors for many companies. So we'll have listed up a few like angel investor as well as VC funding the companies. Now I think with this diagram, I can with this slide I can explain what about the angel investors. Angel investors are the wealthy individuals who will be providing capital for promising early stage business. Early stage business is nothing but it is small startups, what we call as startups. And it is usually exchange for portion of their equity. So they are having a part of it, maybe of 2 lakh rupees. They are willing for your ideas to make into reality. It means to develop a prototype, not to expand your business, just to make a prototype. Of course, your one thing is your whatever your ideas that should be. If you want to preserve it for a longer time, you need to do the patent. You have to apply for the patent, and you should be published, and but it should be registered in your name. So that's the one thing. Second thing is you can ask for the suppose if you are not unable to get the funding, unable to produce the product, and we can go for the angel funding. You can ask for angel funding. You can request for the angel funding. There are so many platforms, online platforms are there, like Angel, Indian Angel Network, and are less expensive. So there are so many online platforms, and also you can upload your what you call it, request in LinkedIn and with your ideas, so that the angel investors will appreciate. That is one of the things. That always if you attend a conference, is what we call as a business summit. Every year is happening in Bangalore. You can go there and you can present your what you call ideas, business models. You can what we call with the detailed version, detailed what we call presentation can give, and if it is good, then definitely investors will appreciate. They will have a good deal. And the good deal is also important. Good deal in the sense they share what we call as a once if you have a product, once the next stage is the VC funding. Let's say develop the product, and once you have a business when you in a market, then you will get a revenue out of it and a profit out of it. And profit sharing is also important. How much profit you are giving to your investors, or what is the profit of yours? That's also very important. You cannot give entire thing to your what you call for investors. And the device may be small. It looks like it's very small, but there is revenue may be huge in terms of millions. There, one of the examples I have given again quote is about matter of cricket. Cricket, I think most of people are watching cricket, right? So cricket bells. So nowadays, like T20 and all, most of the crickets, usually you see that, but with the wicket with the bells, right? So earlier it was just like a normal. Nowadays it is what? It is the LED. Isn't it? So that it was just a starter, and it was nowadays it is for every match is getting millions of rupees. Every match is getting. Do that over the athlete. Similarly, you might have seen that the bottle opener. You might have seen bottle opener, beer bottle opener. The shape isn't it? So it is a very simple concept, isn't it? Very simple one. But for that, there is still he is getting the owner is getting the patent holder is getting a crores of rupees. So that is your idea, and we can make it more. It is a small, what you call small. When you go into when you think in a broader way, for example, if you want to make industry, and maybe software industry, or maybe you belongs to marine engineering, if you want to make a shipping industry, then definitely we need huge funding. For that, we need to go for another investors, right? So this is what we call as a step of what we call as a funding step of fund generation. So one of the perspective is here angel investors, and in angel investors up to around 5 lakh we can ask with the person who is having a good enough financial background. Once it is model is done, prototype is done, and if you have clear clarity about your product and your business model and your market, then you can expand your business of making prototype into real the component, real thing, and you can sell in the market. And for that again we need to make it to expand your business, we need again the funding, right? Again we need a huge fund. For that we need to approach again the different what we call investors. So there are so many investors in the market. It's called as a venture capital. Venture capital is nothing but a number of people, what we call stakeholders, or what we call the investors. These investors are invest the money in the project. There are a number of investors, maybe 10 or maybe 100. And this pool of money is utilized for the business expansion. So there is a slight difference. I think difference I have both here. The difference between angel capital and angel funding. So in case of angel, it is a personal wealth, or maybe you can utilize your own wealth, or you can ask with your maybe friend or within your relationship, within your one group of people. You can ask them and you can develop. It is because it is small. It is a fund is about 1 to 10 years. Whereas the venture capital, It's a pool money of your investors. Pool money is nothing but it may be money of bank, from the investors, from the public sectors, you can ask. The second, the investment stage is a very early stage and it is a early to mid stage or mid stage. It's not in a final stage, it is a mid stage where we need VC funding. So venture capital. Venture capital is the instrument, it is again a pool money from the different investors. That investment size is typically smaller in terms of 10,000 to 100,000. 100,000 is nearly about lakh. It's up to lakh. And whereas an investment size in case of venture capital is typically larger in terms of millions. The millions in terms of millions is about more than 10 lakhs. More than 10 lakhs. It is about the venture capital. How do you get 10 lakhs? Because there are 10 members contributing 1 lakh each, so it becomes a venture capital. And equity stake is smaller and often larger. So equity stake share usually what angel funding usually you cannot expect more revenue because you cannot ask more revenue. You are giving 1 lakh and you cannot ask the 20% share, or you cannot ask 30% share when it is success. Because they are giving a small money, so that is why usually the stake, your stake will be less because idea is the major part. Idea, those having weighted, those having idea, and you will be having the major stakes. When it comes to like the venture capital, usually the stakes around 20%, up to 50 to 20% stakes, because there are so many investors. So an exit strategy, and there is the exit strategy. Exit strategy is not in case of exit strategy. What is meant by exit strategy? The exit strategy is not in angel investor, but you can exit your business investors. Investors can exit from their investments in venture capital. In case of what we call as a leverage. What do you mean by exit? Exit in the sense there are the 50 lakhs, for example, around 10 people have good together had invested around 50 lakhs rupees. Each one 10 lakh rupees or 5 lakh rupees. 10 people total 50 lakh rupees, and they develop a product. And they put it in the market, and they believe that okay, the selling is happening, and they want to quit from it. And they want to give that investment to someone else, another concept or another patent or another idea. They can quit, they can exit, but in simply they cannot exit. What they have to do, they have to either put it in an IPO. It means IPO means it is what? Initial public offering. So in case of NSE and BSE, can registered NSE BSE. Can register in NSE and BSE stock market, and you can give the public offering. Public offering is nothing but whatever the money of 50 lakh rupees, you can divide into shares and public can buy it. So that public would bring money in that. So that the VC investors can exit from it. Not only that, and the M&A. So there are different offerings are there. So come with that. Giving the stake to another stakeholder, they cannot by merging. By merging in the sense what we call as a Vodafone and Idea. You know Vodafone and Idea? Vodafone. Nowadays it's the merge together, right? Vodafone and Idea merge together. And acquisition, or is the M&A required merge and acquisition. Either you can merge the company to another company so that you can quit, can come out of it. By merging with another company, Idea and Vodafone. Or acquisition is nothing but you are taking over the entire investment by purchasing, just like your Myntra is purchased by Flipkart. Myntra is purchased by Flipkart. So because the entire stakes is owned by now, the Myntra stakes is owned by Flipkart. So this is how you can quit from venture capital, so that when you are safe and you will be getting the profit also. So when you quit from it, and then you will be calculating what are the profit happen, and with the profit you will be giving a share to like your stakeholders. or venture what we call as a venture capital investors. Where I told you now there are 50 people. For 50 people or 10 people, they will be needing this state or they will be needing the profit. So this is the difference between angel funding and the VC funding. Angel funding is nothing but a single man who is having a good financial background can contribute to the idea. Those who have an idea can give it and make a product. And what we want to make it as a real product, we need funding. For that we need huge money. Then we can approach what? The next one, VC funding. VC funding is venture capital. So we can have a pool of money from different what you call investors, maybe banks, maybe separate investors are there. So I listed out and I will just show you next slide. So these are the VC funding for in India. So the UK Capital India, this year they are funding for values. Already they have startup, Raiju startup, and Zomato, Oyo Root, and Refreshworks, and these are the what few companies have taken this what venture funding. Venture fund nothing but this is one of the venture investors. Like they are giving more than 10 lakhs profits. Then the SL India, they are giving Flipkart. They have given Flipkart is nowadays is almost the medium scale service company. Medium scale, what is service company. And they have taken what the venture capital from SL India and the Tala Capital, then Nexus Venture Partners, Matrix, Partners in India. These are the what what we call as a venture investors, venture investors. These people always be there, always be there in every what we call as a business conference. Business conference, these people they visit and they watch the presentation of startups, new startups. And if they are interested in their startup, they will what suggest with the deal. They will ask for the deal. They will ask for the presentation deal. And if the deal is okay, then they will with the legal document and all, then they will do the agreement and they will join with the idea those who have been patent of the startup or entrepreneur, and they will fund it. They will fund, and from that out of that they will get a profit. So this is the different stages of the two companies, Tata Group and Reliance Group. So the Tata is also the one of the, as I told